Hey, what is going on, everyone? Anton Thomas back again with another episode of Silver Lining TV, where we motivate and inspire people to create a better life through real estate. And in today's episode, I want to talk about what you should do before interest rates rise. Okay, so I got some notes with me, and I think it'll be a valuable conversation or some information I can share with you guys because I know a lot of people are aware the type of market that we're in, that the rates are low. And I think a lot of people have questions on what they should do, whether you're a seller or a buyer. Okay, so I'm gonna dive into that. So I also have a graphic I'm gonna share with you guys, and it's gonna have a lot of numbers, so you gotta bear with me, okay? Now, if you're an owner, if you're currently a homeowner, you're probably asking yourself, should I sell and move up or downsize? And is now the time to do that? Okay, so if you're not aware, today's rates are below 3%. And experts are forecasting for those rates to rise over the next few years. So, bulk of our conversation today is going to break down what the difference is as the rate rises, okay, and how it affects your monthly payment. Now, with that being said, waiting, because I know a lot of people, when they don't have clarity, they don't make a move, they don't take action, and that's okay. So waiting, it could actually mean that you're missing out on an or a historical opportunity, okay, because the rates are so low and they're historically low. So keep in mind, when your interest rate, when it rises, so does your monthly payment, okay? And even the smallest difference in the interest rate can affect your monthly payment tremendously, okay? Now, I'm gonna show you guys what I'm talking about because it's easier to show you the numbers than it is to try to break down the numbers. Let's see here. So I am going to share my screen. Okay. So as I get this where it needs to be. So as you can see right here, I have a breakdown where it shows your interest rates and how it can affect your monthly payment, also based on the loan amount. Okay. Now, like I mentioned earlier, interest rates are below 3%. I know people are getting three, a little above three, and below three. So, but for the most part, if you have a good credit, you can get under 3% on your interest rate. Now, for a $300,000 home, by securing a 2.75, you'll be paying 1225 per month in your principal and interest. Okay, that let's see. I'm going to make sure because this will also include your if there's any HOA, if there's any like your homeowner's insurance, stuff like that will be included in that monthly payment as well. All right. Now it could vary, obviously, depending on the type of insurance that you use, all that stuff, the HOA fees, but this gives you a general estimate of what it could look like. Now, look at the difference as it goes to 3% and how, in order to stay close to this 1225, you have to drop down to $292,500 to try to stay close to that 1225. And this is just by your rate increasing to 3%. Now, let's say it increases to 3.25, 1240, and that's on a $285,000 home. And as you can see, it goes all the way to a $270,000 home at a 3.75 rate. You'll be paying $1,250. So you lost $30,000 in home to be able to secure a very close mortgage payment to the 1225. Now, okay, if you were to secure a 275 at the $300,000, this is where most people would be today if they have good credit. Most people that are going to wait a few years, and there's not a real legit reason to do so. Maybe people, because we talk to people all the time. A lot of people think they need to wait 3 years to make a move. Well, really, no, they could make a move this year. They just needed more clarity on things. Now, those people who don't get help and don't have the clarity and decide to wait, they're going to be paying what you're paying today for a $300,000 home. They'll be paying the same thing or more for a $270,000 home. And what makes it even worse is the fact that over you buying today or this year versus them buying 3 years from now, you're going to be able to capitalize and really gain all the equity over the next few years versus them buying at the top of the market. You were able to ride up to the top of the market. So you gain equity in your purchase if you were to do it today or this year. So not only are you saving money on your monthly payment, but your home is appreciating 8 to 10% each year, and you get to ride that wave. The people waiting 3 years from now do not get that opportunity. Okay. Now let's talk about the people who are homeowners, but maybe moving isn't the right move for them. Okay. I was one of those people where I bought a home and then about a year later, rates dropped and they dropped by 1%. So I saw that I could secure a lower rate. And I've only been in the home for a year and I wasn't wanting to move because we just moved in and our home is perfect for us. A better decision for me were to take advantage of the low rates by refinancing. So maybe for you, it's not a good time to move, but maybe it's a good time to look into refinancing to secure a lower rate. Now, it's a great option if you're wanting to lower your monthly payment. Okay. It's a great option if you just want to lower your monthly payment. I was actually able to go from a 30-year loan to a 15-year loan and only paying $175 more per month on my monthly payment. So I cut my loan term in half, and I'm paying less than $200 more, and I secured a lower monthly payment, or not monthly. I'm sorry, lower interest rate. Monthly payment went up by 175. Interest rate went down, but my monthly payment went up because I shortened my loan term, if that makes sense. Okay. So refinancing is powerful if you're not wanting to make a move, but you just want to have lower monthly payments and maybe even shorten your loan term. That means you're paying out less interest, okay, over your loan term. So just keep that in mind. A lot of numbers being thrown at you, a lot of information, and I hope it was valuable. Again, I want you to understand that if you're a homeowner currently, ask yourself the question, do I want to move? And if I want to move, why am I not making a move? Is it due to the lack of clarity? Because logically, the money, if you want to make sure you're making a great financial move, buying and selling now is the move to go. If for you, staying put is better, but you bought your home 5 years ago, or even 3 years ago, or 2 years ago, I would highly recommend that you look into refinancing and just seeing what that could do for your monthly payment and how it could benefit you. Again, speaking from my own personal experience, I bought a home a couple years ago. A year after I bought it, I refinanced my home. I was able to cut my 30-year term to a 15-year term. I was also able to do that with securing a lower interest rate, and my monthly payment only changed by $175. So it only went up $175. Okay. Keep that in mind. Again, if you have any questions, if you need more information, please reach out to us. We have additional content and videos that we make every week. We have a whole library of educational content. You can subscribe to us on YouTube. You can reach out to us on Facebook, Silver Lining Real Estate Group. We got all the videos that we post there as well. Or just reach out to us via direct message. We're here to help in any way. But yeah, you guys take care out there, and I will see you guys on the next one.